So one of the things that I like to do is, and I'm going to start doing it more, is selling naked puts on stock that I'm willing to own that gives me good income. NVIDIA is that. So we're trying to do it for weekly income, right? I don't know if anybody did this with me, but I am going to love talking about naked puts. It is a strategy that a lot of financial advisors do. Okay? I was a financial advisor for a very long time. All my securities in license, 6, 63, 7, 65, 24. This is a strategy. This is almost the only strategy they know how to do. When they say they trade options, this is what they mean, because they don't know how to trade options. They just know how to sell naked puts and do covered calls. But this is how a lot of the big money managers manage portfolios. I'm telling you right now. You can do this for weekly income, monthly income, stock ownership. So I sold a naked put here. Y'all know. Fucking hang on. Fucking dying, man. I'm going to bring it back over in a second. I'm going to pull it up on a chart. Okay. So I sold that naked put. We did it in class as an income and a stock ownership. Y'all remember that, right? This is a great strategy, great income. So I sold that naked put. Now, remember I messed up because I accidentally bought and I sold right away. Forget that one. That doesn't count. It was right here. It was the 111 put, and I sold it for $1. That's all it was. So, and it was like less than 7 days. So we're trying to just generate a weekly income, right? $100 to $200 a week income. So we sold the naked put for $1. Okay, cool. Now, if you noticed, the next day it cratered. Plus, we sold it later in the week, so we didn't get as much credit. It cratered. I was going to be going out of town. So what I did was I rolled it, right? Rolling it is a way that you can just kick the can down the road. That's basically what I did. So here, I ended up buying back the 111 put for $4. So I sold it for $1. I bought it back for $4. And then I sold another one with a little bit more time, another week out. Because the trade wasn't working, I wanted to give myself more time. So I sold the next week out, and I was able to even sell it lower, which means if I get put the stock, I would have got the stock at 109, even better. And I got a credit of $4.16. So if I paid $4.04 and got a credit of $4.16, I was able to roll this and actually get a credit. Okay, get a credit. You can see right here, 12 cents. All right, wow, the VIX tanked, so the market's probably going up. Okay, it was great. 12 cents. Buying myself time. Then you can see yesterday, I bought that back for 50 cents. So how much did I make on that trade? Remember, this trade was going wrong. I mean, it cratered down. I was getting killed. I mean, I could have owned NVIDIA, but I'm not doing this to own the stock. I'm doing this for income, but if I happen to get put the stock, I'm okay with that. So I was losing. So on the first one, so if I sold it for $4.04, and you may not understand what I'm talking about, but I was down $3.04. But then I got this credit at $4.16, and I bought it back for 50 cents. So how much did I make on the roll? So the first trade, again, I didn't lose anything until you close it out, but I was down $3.04, so $300. But when I rolled it, I was able to make 366 plus. So what did I do? I made 62 cents. 62 bucks. So I was able to manage this naked put and take a loss and turn it into a $62 gain, right? And that was like a week and a half. So one thing about naked puts, if you know what you're doing, I mean, and look, and then it shot up. If you know what you're doing, this is a fantastic strategy. And I'm going to be doing this strategy quite often because I love it. I did this as a money manager, and I'm going to do it for my own portfolio because I know how to manage the trade and work my way out of losses. Does that make sense? So I work my way out of a $300 loss into a $62 gain because I know how to kick the can down the road. The risk is the ownership of the stock. Okay? For example, I started off with the 111. I started off with the 111. This is your risk. Okay? I sold the 111 put. I sold it at 8.30. So my risk is owning the stock at at 111. So if you go here on 8.30, let's take a look. Where was NVIDIA on 8.30? NVIDIA was about $119 a share. I sold the 111s. So my risk is owning NVIDIA at $111. Okay? That's what it is. Now, because for every one contract you sell, you're obligated for 100 shares. So if I put the stock at 111, I have to have $11,100 because I have to buy the shares at 111. So a couple things. Would you rather own NVIDIA at $119 or would you rather own NVIDIA at $111? My guess is if you wanted to buy NVIDIA, the stock, you would rather own it at 111. Who the hell would want to get it at 119? So a naked put is two things. Stock ownership at a discount. So if you like a stock that you don't mind owning, why are you going to go buy the stock? Just go sell the put. Collect some income. Because the second reason you do naked puts is to collect income. With the spread, you have a defined risk. So you can only lose the width, right? The width of the strikes minus the credit. But they're two different. You're doing spreads to try to get income, right? Predict the stock. Naked put is stock ownership, collecting income. There's different ways. I'm going to be talking about this a lot. I'm going to get into the options, but my point is this is the strategy that all of the money managers do. This is how they manage multi-million and billion-dollar portfolios. Just so you know. And I know because I was one. And that's what I'm going to do. So do I want to sell a naked put up here? No. I want to sell a naked put when it's blue line's down in the bottom zone. Right? Let the blue line come down here and start selling your naked puts. I don't want to sell a naked put when it's up here. So you can have a couple different stocks and you just wait until it's, oversold. And then you sell your naked put if you can get a good income. Absolutely. Yes, they can. So if it goes down far enough, so let's say you have the 111 and NVIDIA's down here at 105. Yeah, you can get put the stock early. That's fine because you go into it willing to own the stock. That's my point. You have to be willing to own the stock. Don't sell a naked put on a stock you're not willing to own. All right? But yes, this is why I also rolled it. Because that day it was down big time. The stock went down to 105. I had the 111. I didn't want to get put the stock, so I went ahead and rolled it early. Normally, I don't roll it until Friday. I rolled it on like a Wednesday because I didn't want to get put the stock. But if they would have put me the stock, hey, that's fine. I would have taken the stock, right? No problem. I would just start doing covered calls. Not a big deal. Right? And keep doing it. I know somebody that has over 100,000 shares of NVIDIA. Over 100,000. And 90% of the shares that they got is because they sold naked puts. They receive about $70,000 a month in income off of naked puts just on NVIDIA.